What is up, everyone? It's been quite a long time here. Maybe almost 3 months now since I put out my last video. 2.5, 3 months or so. Well, let's just check. Uh, we were up around 110,000 last time I was speaking. Yeah. About a little over 2 months ago, somewhere in there. End of October-ish. Basically, up here at 110,000, I was explaining how this whole range we were in was a bearish distribution range, and that we were looking for quite some follow through to come to the downside. One of my big targets was the $84,000 region down there, which we tapped right into. I just wanted to do a big update on how the bear market is going, where we're headed, and what we can expect in the future. Now that we've come down here, and there's a lot of stuff on the screen here, so just try to make sense of this as best you can. I'll go over everything that you see here. This is on the daily time frame, and just to be totally clear here, I am expecting one more low to come. So that is before a larger retracement or even more sideways consolidation. But down here at the $81,000 low, I'm expecting us to take that out at least one more time, from which I will show you what will be occurring after that. So basically, from our very top at 126,000 in Elliot Wave's terms, we can show or can see that we do have a impulse to the downside here completing. Now, all that means is we're looking for a structure to finish in Elliott Wave terms. We have our initial push down in our wave 1, our retracement in our wave 2, our big extension in 3, coming to the 1.618 extension. From there, where we are currently, and as we would expect, a long sideways consolidation of a bearish nature in our wave 4. Now, it can be debated what's going on here because it's not fully clear yet, but we could count this as a W, X, and looking for one more three-wave structure higher. Maybe taking out the high of W, maybe not, but just another structure higher here in a simple sideways WXY. Otherwise, we're looking for a triangle in an A, B, C, D, E. It's going to continue to go sideways, and we're going to continue to compress more there. That's why I also have the triangle drawn here, just to keep it on the chart, just to see what happens. Basic concepts, we're looking for more sideways consolidation. If I draw out maybe a simple pattern here that might happen, more sideways, and then we're looking for another low to be made, which would complete our initial impulse from the high, which would complete our entire structure coming down, which means that downtrend move would be then over. Also here on the chart, you can see this big red line with a 5 on it. All that is this line here would be 5 times the length, this wave 4, specifically in relation to the length of time the wave 2 took, in black up here. Now, generally, you'd like to see 3, 4, 5, maybe even 6 times the length of your wave 4. After the 6 times length, you kind of start needing to think about other things going on, because once wave 4s become too long, then it most likely is not a wave 4. But here on January 10th, 2026, we have the 5 fib time. We can expect our wave 4 to finish before then or right around this time frame. So I have this laid out here. Important resistances to see on the chart. Here you can see where we found support quite a few times. And this purple line is an order block high value node, or high volume node, excuse me. That is from this area over here. Right above that, we have a large anchored VWAP all the way coming from the low at $52,000. That is our volume weighted average price from this last low where we impulsed up to make a dramatic new high. That is right above us, currently keeping price below as resistance. Also right above us from our last impulse here, we can also check the very all-time high, which is quite a bit higher. But if we drag our anchored VWAP from the move down from our last wave 2 high, we also have that as major resistance sitting right above us in confluence with the yearly open, which is also right above us. Potential liquidity up here with all these highs, and the trend line of the triangle that could be developing. Also in this area, we could implement some extensions and some wave 4 fib targets from wave 2 high to add even more confluence. And also even a tad above that, we have a large daily fair value gap sitting right here, co-aligned with the previous range point of control. So that is a lot of speaking, a lot of words for this entire area right here, between 93 and 96,000 being extremely large resistance. I'm not expecting us to reclaim that in any way. I am expecting price to continue sideways. Like I said, maybe make a shoot for the upside liquidity before eventually making one more pattern to the downside. That will bring us to at least taking the low once more, so at 80,700. Big support below us, we have a large weekly naked point of control at 77,000. And right below that, large obvious liquidity and a market structure shift if we do take that low on the high time frames at 74,500. So this last move down here, I would expect us to end somewhere right in this range of 80,000 to 74,500. We can front run this level here. We could even front run this level, but most likely price will come down here and find support somewhere in this region before we can finally start the talkings of a potential larger retracement to the upside, or even more sideways consolidation, which would be quite boring and time consuming. But that is what we're looking for. After this wave 5 completes, we can have a finishing A, and we can look for sideways consolidation in our wave B. Like I said, the wave B can be more sideways range bound consolidation, which would basically just keep us in the same range we've been in for a much longer time. And that would be this range here, all in this box here. On the flip side, you could get a larger retracement in your wave B, which would be more bullish, more impulsive type of three-wave structure, and that could just look like a simple A, B, C to the upside. Same type of area, you'd be looking for massive resistance all in that $95,000 region. That is a quite a future distance away, so we will see what happens when we get to that point, if we do have a larger retracement to the upside, or we just end up going sideways for a much longer period of time. If I pop out here on the 3-day chart, ultimately, we are looking for this B wave to be, like I said, tight, quite time consuming. So once we do have this structure here complete in our A, we can expect the B wave to develop here. And this will take a few months' time for sure, all the way into early spring, most likely. And once that B wave finally does complete, we would be looking for one more massive move to the downside to cap off this bear market, with the end date being the week of October 4th, 2026. Now, if we just pull a simple Elliot Wave extension here, let's say this A wave does finish, it sweeps the low down here at 74,500, and then our B wave does actually come up to $97,000, which is totally possible. And then let's take that extension target and toggle on our wave C targets here. And let's see what we get. Now this is log and off log scale targets, so it will depend a lot. But if we just take a quick look here, most common targets being the 1.236 to the 1.382 extension here. We're looking at that $50,000 region. Now if we toggle it off log scale, we also have our big 1-to-1 extension down here at $45,000. Let me redraw that really quick, because you would be expecting a big impulse down here to cap off the wave C. And if you notice, I have a bunch of horizontal lines down here, which is a massive confluence level. So if we just take a look at what's down here very briefly. Now this is months and months and months into the future. This is next October. We have very large support down at this region, a very large liquidity grab at the $49,000 lows, very obvious lows, a previous range high value node, the 2022 yearly open. We also have a large macro 50% retracement Fibonacci level, the 2024 yearly open, and a very large anchored VWAP coming from the last bear market lows at $15,000. Needless to say, this big circular area right here is very, very, very large support, and that is where you would expect your bear market to end, which would also correlate with around a 60 to 67% retracement. Needless to say, I am trading this market with a bearish bias. I am looking for more downside, with potential here on the short term, another 20% move to the downside, which is a very large move. From there, I'm looking for, boring sideways consolidation in a B wave, which will take quite a large amount of time before we finally get a large move to the downside again, potentially as great of magnitude as our wave A. Even larger magnitude is a high possibility. Looking for another 50% pullback after this wave B completes. And that is about all I have here for you on Bitcoin. Again, that is dragged out quite a bit of ways into the future. Most locally here, over the next month, the next few weeks even, we can expect a new low to be made. Until then, make yourself comfortable in this bear market and enjoy the slow, painful ride. Have a good one.